Hi lovies, and welcome back to this channel. If you're new here, my name is Malinda's channel. Thank you so much for all the love and support. Don't forget to please subscribe to this channel, turn on notifications so that anytime I upload a video, you will be the first person to be notified. And to my returning subscribers, to those people that share my videos and also educate you guys are the real MVP. Thank you so much. All right, lovelies, let's dive into this video. So, lovelies, I came across this video on my For You page on TikTok, and I thought to share with you guys where a lot of people are reacting to the fact that $2.9 trillion was actually wiped off global stock market on Friday, and it was as a result of fear of global recession, and this got a lot of people reacting, and I was able to put up some of those stitches. I'm just gonna roll it. Please leave me your own thought in the comment section of what you think and what do you think that this actually means in the stock market. Alright lovelies, let's dive into it.
What just happened to the stock market at 3 p.m. on the 1st of August? Well, we had terrible manufacturing data from the US. This is an important number. It's called the ISM manufacturing data. And the scary thing is exactly the same thing happened in 2007. We had terrible manufacturing data. So these figures just here say the US is already in recession. Now, we had the Federal Reserve last night say they weren't going to cut interest rates until September. And remember, there is quite a big lag between cutting rates and the economy feeling the benefit of it. So we're not going to really feel the benefit for the rest of this year. Survey. So if the numbers are under 50, then it means that the economy is retracing. Now, yes, we expected a little bit of a slowdown, but the actual number that came in was poor. But even worse was the employment, right? Those surveyed who were expecting to take on workers in the future, 43 is about as low as these surveys get. As those of you who have been following my page for a while, I have been waiting to get short this S&P, and now today, as of 3 p.m, I am fully short because this was a terrible number. This means that we're getting real earnings downgrades. And this is where the numbers don't lie anymore, okay? All these machines that chase momentum higher and higher and have been doing for about 6 months now. When we go into recession, the numbers do not lie. We're going to get profit warnings. We're going to get downgrade after downgrade after downgrade, okay? So we are now at where 54.60. It moves very quick. It's now coming up for 5 p.m. So we got another 4 hours the US market being open. Now in 2007, on the day that ISM was this bad, it was very similar numbers. 2007, the market finished down 3% that day, right? Are we going to finish down 3% today? It's only down 1 at the moment. So it's going to be very interesting to see the result. We'd be going down again tomorrow. We get all the economists come out and warn over the weekend. And don't forget, the chances are Iran is going to do something to retaliate over the weekend as well. People will not want to be long the market for that. So be very careful over the next 48 hours of trying to buy the dip. Just be careful. Tighten that risk in, really take it down. I bought volatility, I bought put options, I'm short the futures. This is not advice on what to do, trying to make sure nobody gets hurt out there, and market commentary. Now in 2007, when we had the bad number of the ISM, the same day Caterpillar had a big profit warning. So Amazon or Apple, which one is today's bellwether of the market? It could well be Apple. Imagine Amazon or Apple have poor numbers tonight. What would happen to this?
The US stock market and the stock markets around the world are crashing right now. If you have money tied up in stocks, go check it out right now and make sure your money didn't disappear overnight. I lost half my earnings overnight, woke up and had to sell everything. Dow futures dropped 800 points. S&P futures dropped 3%. The stock market in Japan is completely crashed. I believe it's crashed in Korea too. Apparently this happened overnight. People are speculating that we're heading into another recession just like we did in 2020. Other people are saying, oh, it's no big deal. Every 4 years around election time, this happens. People are uncertain about the economic future of the United States, so they kind of panic, start selling like crazy, and then prices of stocks drop.
So today was a scary day for the market because it seemed a lot like 1987. Japan posted its largest loss in the stock market since 87, which was huge. A lot of people are freaking out. This is the problem I have with investing into the stock market. Not to say you shouldn't, but you're giving up your control to outside circumstances. And if you've got a large bulk or all of your investments tied up in the stock market, you should be scared. You should be actually really fucking terrified right now. And it should be a lesson that you need sustainable cash flow that in the case of a recession isn't going to go anywhere. One of my favorite businesses that you can start and still run while keeping your day job, still invest in the stock market, but at least build up some sustainable cash flow on the side is a home service business, specifically a cleaning business. You don't have to do any of the cleaning yourself. You can hire contractors to do it for you. But the thing is a lot of times during recessions, these businesses will fire their custodial staff because they're cost centers and hire cleaning companies because it's a lot cheaper. They don't have to pay the payroll tax, stuff like that. In residential, sure, some customers may pause cleaning during recessions or downturns, but you can always discount to keep them retained. And that's not to mention the high class customer that isn't going to cancel because recessions don't typically affect them. You can get started with one of these businesses with as little as $300. And I have a training in my bio. It's completely free. It's 42 minutes from start to your first $1 million in the cleaning business. How to grow, how to scale it. It's 42 minutes. It's free. Check it out in the link in bio.
The very trades that have driven the stock market to all-time highs this year are starting to unwind. Now, this trend started on Friday, and that was because we got the jobs data in on Friday, and it showed that the jobs market and the labor market is starting to look a little bit weaker than economists had anticipated. That Friday number came in after we saw initial jobless claims coming in higher than anticipated on Thursday. So the 1-2 punch of those numbers painted a picture of a labor market that is starting to buckle under the weight of higher for longer interest rates from the Federal Reserve. We saw the sell-off starting right after Friday's jobs data came in. And then when Asian markets opened up on Sunday night, we saw that sell-off continuing. Markets are now pricing in a higher than likely percentage chance of the Federal Reserve cutting by 50 basis points in their next meeting, as opposed to 25 basis points. Now, as a reminder, the Fed has a dual mandate. One is to fight inflation and tame inflation, and the other is to make sure that unemployment is kept at bay. His latest jobs report called into question how well they've been doing at controlling the labor market, particularly because unemployment stayed above 4% for the past 3 jobs prints. In times like this, there's this phrase that really defines markets, which is to be greedy when others are fearful. And that's what a lot of guests who come on Yahoo Finance have been talking about. When you start to see a lot of fear in the market, that is a great opportunity for particularly younger investors to be getting in, especially in a year like this where stocks have been driven up to such high valuations, meaning they've gotten really expensive. Now they're starting to become a little bit less expensive. We're still in a record-breaking year of performance for the S&P 500, for the NASDAQ. So some investors and advisors would still say, hey, if you're seeing all of this sell-off happening, this might be your time to get in at a discount and then ride the rally back up for the second half of the year once the market recovers. The big question, of course, is whether or not that's going to be able to happen if the reasoning that is driving this sell-off is true, that there is some sort of economic sickness going on that the Federal Reserve was too slow to address. If we're heading towards a recession, that of course is going to be bad for markets. But even if for some reason the worst case scenario did come true and we were heading for a recession, long term we see stocks recovering and hitting higher highs even after recessionary time periods. So just because stocks are selling off because of concerns about the labor market and therefore the broader economy, that doesn't necessarily mean that it is a bad time to be investing.
If you live on planet Earth, this is going to be a very important video for you to understand. This is the volatility index. This gauges how risky the economy is and how much of a potential there is for collapse. It's up 122% in the last day and a half. It's above levels we haven't seen since COVID. Right here, this is 2020 when we found out COVID was happening and the economy was going to be just completely shut down. Now it just spiked to 52. This is a massive indicator. This tells the world that we are on the brink of a collapse and the global economies are crashing right now. Japan's stock market's down 12%. Europe's is down massively. The futures market for the United States is down massively. And to go even further with this is the chart going back about 20 years. If you look, this was COVID. This is where we are today. This was the 2008 financial collapse. This was the housing market crash, that one that everybody talks about how horrible, the worst ever. It wasn't even that which was COVID and was right now. That tells you the brink of what's about to happen. Do you remember COVID? This is right up there above the COVID, but below the financial collapse of 2008. This was the tech bubble. This indicated all of these major things. So buckle up. It's about to get a little wild here in the United States and across the globe.
When I tell you that we are on the verge of a recession, the other day I thought that I would do DoorDash to make some extra money. And when I tell you there was no orders coming in I literally sat there for hours, and maybe one order would come in every hour, and it would always be a low pay order. Mind you, in 2020, I was in grad school, and I literally lived off of DoorDash. I paid my bills with DoorDash, everything with DoorDash. And I would decline orders after orders because I knew a higher pay order would come in right afterwards. But people literally are not ordering DoorDash. People cannot afford to order DoorDash in this economy. So the next day I was like, okay, bet I'll try Uber Eats. And it was the same thing. And I just saw the other day an article about how McDonald's is having trouble making sales right now because people can't afford to buy their meals anymore. And they came out with a value meal for $5, but they're like, we can't keep selling this because we're just not gonna make enough profit off of it. The cost of housing has skyrocketed. We are going somewhere that I'm very, very afraid of.
The stock market was on pace to have one of its worst days in history, with the S&P 500 down over 4% earlier this morning and the Nasdaq down as much as 6%. Now, since then, we have rebounded, and who knows, by the time you're watching this, the stock market could potentially go green. But either way, if you are invested in the stock market and you have been seeing this is probably pretty scary. Now, I have been talking about economic issues for quite some time, and the stock market being out of touch with what is actually going on in the US economy, because we have had credit card debt at all-time highs, personal savings at all-time lows, and we continue to see the unemployment increasing. But the stock market, up until the last couple weeks, has basically just been making all-time highs every single week. And I believe earlier this morning we briefly entered a technical crash, being down over 10% from the top. We have had headlines like Warren Buffett selling half of their stock and being at record high levels of cash, with $277 billion on the sidelines, potentially waiting for the crash to happen. And I don't necessarily know what is ahead for the US stock market, if we're just going to recover this drop and start hitting new all-time highs later this month, but I do think that there is still shaky situations happening in the economy. Let me know your thoughts in the comments. Do you think the stock market is just going to recover immediately, or is it going to continue crashing down later this month? And follow me for more.
It is officially time for a recession in the United States. So the Sahm rule, which officially predicts when a recession is going to be triggered, has officially signaled the start of a recession. And the news of this spread really fast, impacting the markets almost immediately. We can see that the S&P 500 was immediately impacted by this news that just dropped a couple of hours ago, dropping 2% and losing $112 in value. Also, at the same time, stocks lost $2.9 trillion because of the fears that this is going to be a global recession. So we've been talking about a recession for 2 or 3 years on this page, and it seems like we're at that point now where it's here and it's about to get ugly.
What is actually happening? Is it that the prophecies are about to be fulfilled? That, this actually got a lot of people reacting that on Friday, on the 2nd, I think it was on the 2nd, and it actually came up that 2.9 trillion was actually wiped off global stock market. And this got a lot of people reacting. People were so scared at what is happening. The fear of global recession and geopolitical tensions sparked a massive sell-off. Major tech companies like Amazon, Intel, and Nvidia experienced significant drops. The Nikkei 225 in Japan tumbles 5.8%, while European and Asian market also saw substantial losses. Analysts attribute the sell-off to a combination of weak US economic data, disappointing tech earnings, and concerns over a potential escalation of tensions in the Middle East. This market crash is the worst since COVID 2029 pandemic, and this skyrocketed after an employment report was published later on the same day, showing the US job market has grown less than expected in July, was pushing up in tons the unemployment rate at its highest since 2020. One, the report boosted the market fears that had already emerged earlier this week following data showing weakness in the US manufacturing sector and disappointing results from semiconductor producer Intel. The Friday slump meant the S&P 500 index, which tracked the stock performance of 500 of the largest companies listed on the exchange in the US, heading for the worst session in around 2 years. And as a result of this, a lot of people are actually reacting to the fact that this is actually a point or a period in time that you can, keep on buying and buying and buying. Why some people are like, okay, is it a time for them to buy, or is it a very bad time for, them to buy? Is this going to affect, the general well-being of, the way at which people live and all of that? Because investors are now closely watching the upcoming non-farm payrolls report, hoping for insight into the pace and magnitude of potential Fed rate cuts in the coming months. As the trading day progresses, market participants brace for future of further volatility and uncertainty, with the aspect of global recession looming large over the financial landscape. Right, with the happenings, with all of these things happening, guys, do you think that this crash will just continue, happening, like crashing each and every day, or do you think that it will actually recover from its, crashes, with all of these companies, trying to set off and all of that? I don't know if they are actually doing the best thing, but anyways, lovelies, how do I know? What do I, actually, why not just, leave me in your thought in the comment section of what you think, if this is a good thing or a bad thing. Like, seriously, lovelies, the way at which it is as if the bigger, boys in the buildings are losing money, are selling off because of the fear of, the fear of unknown, and this should be an opportunity for maybe the to actually get buying most of these stocks. And when I saw this, and I was like, what is happening? What does this mean? I decided to make my own research to say that, okay, I think a lot of bigger or it is are losing money, and this actually have to give rooms for people, or an opportunity for people to actually buy these stuffs. Anyway, lovelies, why not just leave me your own thought in the comment section of what you think of this video, and what does this actually mean in your own end. You can leave it in the comment section. Like you all know, I am here for learns. We are here for learns. If it's something that is gonna benefit each and every one of us, you can just leave it in the comment section of what you think. If it is that the Babylon is actually falling, then you can actually leave it in the comment section, because who knows. Anyways, I want to also use this medium to say a very big shout out to my newest subscribers, to those people that share my videos and leave commentaries and also educate each and every one of us. You guys are the real MVP. And I also want to use the medium to say a very big shout out to those people that joined by membership. And in case you want to actually support this channel by either joining the membership or giving out a super tag or something, you are welcome, and thank you so much for all the love and support. And I will see you, lovelies, when I upload the next one.
Thank you so much for all the love and support. Why not just leave me your own thoughts in the comment section of what you think of this video. And do not forget that we do not support any form of bullying, harassment, or worse. We're just here for educational purposes. So please subscribe to this channel if you're yet to do that. Like, and I will see you, lovelies, when I upload the next one.